Work together 15-1, we're going to do two things. We're going to prepare an unadjusted trial balance, and we're going to journalize adjusting entries. So you can open that up first. Step 1 is the unadjusted trial balance, and this is where we're going to prove that our debits equal our credits in our general ledger. So after we've done all of our posting, now we have to prove that they equal out. And then from there, we'll record some adjusting entries. Remember, some of your accounts will have zero balances, but in your unadjusted trial balance, we need to make sure that we list every account. If you look at the instructions, it says a partially completed unadjusted trial balance is given for Southside Electric for December 31st of the current year. Complete the unadjusted trial balance, including the heading. Select the correct account for the missing account titles and obtain the account balances from the general ledger. And then we're going to calculate and enter the totals. So for our title, we need three things. The first thing is the name of the business, which is Southside Electric. The second line is for the name of the financial paper, which is the unadjusted trial balance. And the third is for the month, or the day, I should say. And it's December 31st, 20, and then dash dash. Again, if you don't get the two dashes, you can go into your settings. I believe it's under general. Then you go to keyboard and shut off, I believe it's smart punctuation, and then you can get the two dashes. Okay, so now we're going to take a look at what we have here. We have a list of most of our accounts and the balances. And again, those are just taken right out of the general ledger up on the top. Okay, so I'm going to pin that. You can see we have cash, petty cash, accounts receivable. The next one is our allowance for uncollectible accounts. So if I look up here in my general ledger, I have allowance for uncollectible accounts. So let's choose that account there. And you can see up there, it has a credit balance of $48.67. So again, we would just transfer that amount, $48.67 in there. And you can see how most of this sheet has been done for you. You just have to fill it in. So now we have merchandise inventory, we have supplies, office, and the next one would be our supplies for store that is missing. So we will choose that one. You can see that your store supplies has a debit balance. So we're going to put that amount in there, 4483.62. Okay, then we're moving on down. We have prepaid insurance notes, interest receivable, office equipment. What is off after office equipment is accumulated depreciation for office equipment, and that's something we haven't gone over yet, and we will go over it this chapter because we are going to make some adjustments to our equipment. You can see accumulated depreciation for office equipment has a credit balance already of $2,395. And you don't have to really know anything about that account. It's just that the balance of it in your general ledger is that. Okay. Oh, I missed one up there. Do you see the interest receivables? Let's go up to interest receivable. You can see that it has a zero balance, so we're just going to leave that blank. We still need the account title because we're going to make some adjustments to that one. All right, let's keep scrolling down. You can see federal income tax payable. So when we scroll down to our federal income tax payable here, you will also notice that one also has a zero balance. And again, that's something that we're going to use for our adjustments. So we're going to leave that blank. Income summary, you can probably guess what that one is because we only use income summary in our closing entries. So income summary also has a zero balance, and we're going to leave that one blank. All right, then we'll scroll down to depreciation expense for office equipment. Depreciation expense, office equipment, that has a zero balance. We will be using that for our adjustments. Also, the depreciation expense for the store equipment has a zero balance, so we will leave that one blank. And again, when you create your unadjusted trial balance, you have to include every account in there because some of them are going to be used as we make the adjustments. Okay, after depreciation, we have insurance expense, so we need to include that one. You will see that insurance expense also has a zero balance, so we'll leave that one blank. Then we'll scroll down. Our next one is supply expense for office. So we have supply expense office. We can see that has a zero balance. Supply expense for store has a zero balance. Uncollectible accounts expense has a zero balance. So we'll leave all of those blank. All right, so the ones that are blank just means that they have a zero balance and we will be using those. Okay, then we're going to go down here and we're going to write the word totals. And what I would have you do is you would add up all of the totals of your debits. Since you know how to use a calculator, I'll just give you that amount. It's $624,362.52. And again, we would add up all of the credits. $624,362.52. And again, it's very important that before you go on to the rest of the problem or the rest of the end of the fiscal period work, that these two balances equal out. If they do not equal out, you have to go back into your general ledger and make sure all of those balances are correct. Okay, we'll go on to the next one. I should have had that all correct, so there we go. We're going to go on to part 2, where it's journalize the adjusting entries. And I'm going to flip over to a different document here, but it's going to look the same as what you have on here. Okay, this is what part 2 will look like. And in here, for this example, you have the 2 tabs right there. I just split them, so this stuff here is your adjustments data, and this is from the adjusted trial balance. Okay, we're going to go on, and it says to journalize the adjusting entries for supplies and prepaid insurance. The adjusting entry for the allowance for uncollectible account has been recorded in the journal. The December 31st value of supplies and prepaid insurance can be found above. Okay, so just as a little reminder of how to do adjustments, we are figuring out for our office supplies, our store supplies, and our prepaid insurance, how much of that has expired over the course of the fiscal period. You can see that it says they are December 31st values of those. So we're going to figure out how much has expired because those are an expense to your business. Okay, so we're going to start with office supplies. December 31st, we have office supplies valued at $548. So we're going to take, I'm going to get my pen here. I'm going to switch the size. Okay, $548. That was the ending balance. Okay, what we need to do is we need to go back and we need to look right here. Our office supplies at the beginning of the fiscal period was that. Okay, so to figure out how much has expired, we take the beginning balance, $3,108.08, which came from right here, minus, that's our beginning balance. This is what we have. If we went and into the inventory, took an inventory of it, and we find out we have $548 left of office supplies. So we have to figure out the difference of that. So if I subtract that, I would come up with $25,000 or $2,560.08. This amount represents an expense to your business because that's the amount that has been used up. Okay, so we're going to take that information and we're going to record it in our journal. We're under the adjusting entries. The date is the 31st. We have an expense. This is an expense to our business. Expenses have normal debit balances, so we're going to put supplies expense for office. And it's going to be a debit for the amount that we just figured out over here. $2,560.08. Okay, so now our second account, we're going to reduce the amount of supplies we have in our office by the same amount. We used up $2,560.08 worth of supplies, so supplies has to go down by that amount. So when we are all done posting that, our supplies for our office will be the correct balance, the amount that we actually have in inventory. All right, so that's our first adjustment. Our second adjustment is to store supplies. That's the ending inventory. You will notice our store supplies at the beginning of the fiscal period is right there. Or in that is the balance that we have right now, and we need to make adjustments. Okay, remember, every time we use store supplies, we don't go in and we reduce the amount. All we're going to do is reduce it at the end of the fiscal period by an adjustment. So to figure out this, we will take the balance of $4,483.62 minus what we have left over, which is $640, and we will come up with our store supply expense of $3,843.62. Okay, so that's the expense to the business, is the amount that has been used up. We're going to record that in our journal. It's the 31st. The expense is supplies expense for store. And again, it's going to be represented by this amount right here. This is the amount of supplies that were used up, because this is our beginning inventory. This is our ending after we've taken inventory. Okay, so we're going to put that amount in there. We're going to reduce the amount of supplies for our store by the same amount. So to reduce the asset supplies store, we would credit it. Okay, our third adjustment goes to prepaid insurance. Now, all adjustments aren't made this way, but these three, you have a beginning inventory and you have an ending inventory. Okay, so our prepaid insurance at the end of the fiscal period is worth $16,000. Prepaid insurance at the beginning was worth $11,200. Remember, prepaid insurance, every day that goes by, you use a portion of your insurance. And instead of recording that every day, the amount that's used up, you just make an adjustment at the end of the fiscal period. So our beginning balance is $11,200. Our ending balance of prepaid insurance is $1,600. The difference is $9,600. And this is the amount that represents the expense that you had for insurance. So the date is the 31st. The $9,600 goes into insurance expense for the amount of insurance that has expired. And the amount of our prepaid insurance is going to go down by the amount that is expired, which is $9,600. So again, when we're done posting our prepaid insurance, we will have a true balance of $1,600, which is the balance right there.